Fearless Disease.
So the Federal Reserve has now cut rates again, third meeting in a row, a 25 basis point cut this time. There were three dissents to this cut. The first time there were three dissents in about 6 years, in September of 2019. In this meeting, Stephen Myron dissented because he would like to see a 0.5% cut. And then on the other side of this, Kansas City Fed President Jeff Schmid, as well as the Chicago President Austin Goolsbee, wanted to keep pause rate cuts where we are right now. The Federal Reserve is signaling in the dot plot they're looking for one rate cut in 2026 of 25 basis points and one rate cut of 25 basis points in 2027, and that's it. The Fed signaling that it's within now 0.5% of what they believe its neutral rate. The Fed upped the GDP projections for this year to 1.7%, ending the year next year at 2.3%, and then back to the 2% target in 2027, 1.9% in 2028. Now, on unemployment, the Fed sees the rate rising to 4.5% this year and falling back to the current level next year, and then falling to 4.2% in 2027 and 2028.
He's throwing out a lot of numbers, but it's making a lot of sense. We may rewind just a little bit, but welcome in, Fearless Disease fam. Today we expose the truth they hate to hear, like right now, if you are ready. The Fed slash is not just 3, but 3.5 to 3.7% for the third straight time. As you see, one of the Fox experts there explaining how Powell's uncertain year, I apologize, for economy and labor market despite sticky inflation. Let's go back to the numbers that he's saying, because we're going to break it down for each year. And as you see, it's going up the same way, either plus 25, either plus 50, plus 75, plus 75, plus 75. It's going up in increments of 25. Now, the next one's going to be, they don't have on here, what I don't understand, is that we skipped a few years, of course, in June 2023, 0. But then you see this long stretch from September 23 all the way up until July 24th. There was nothing at all. And now, since he's slashing, since Trump, of course, is in office now, it has been slashing. So some experts will say this is a good thing. Some will say it's a bad thing. Go ahead and put it in the comments right now to say if it's a positive or negative for us.
To 1.7%, ending the year next year at 2.3%, and then back to the 2% target in 2027, 1.9% in 2028. Now, on unemployment, the Fed sees the rate rising to 4.5% this year and falling back to the current level next year, and then falling to 4.2% in 2027 and 2028. On inflation, the Fed sees CPI inflation up 2.9% this year, then falling back 2.4% in 2026, 2.1% in 2027, 2% target by the end of 2028 for PCE inflation.
Which makes sense. A 25 BP cut supports jobs and slowdown. But, of course, what most people think, and Fox warns us, is that tariffs could spike prices. And in 2025, and cautious note. It's going to. There's no way around it. I don't know why they would say it may. It most likely will. 100% it will. But it's okay. It comes with the territory when it comes to tariffs. We're going to shut down other countries, I don't say just people, other countries, from just bringing in their exports and just being free and just 100% gross on their end. No, we're going to tax them, and it's going to level out our families here in America. We're going to have to go through a little bit of bumps and bruises before everything flattens out. We're riding smooth.
Core inflation follows the same path, 3% end of this year, 22.5% for 2026, and 2.1% for 2027. The Fed says the economic activity has been expanding at a moderate pace in this statement. The statement also says they're attentive to the risks on inflation and employment, but that the downside risk to employment has risen in recent months. So you have the statement saying that inflation also has moved up, acknowledging that since the beginning of this year. Now, so in all, third rate cut. Now we have in a row 25 basis points. The Fed lowering its expectations in its forecast for moving forward for inflation, but increasing its expectations for GDP moving forward throughout the end of this year and the next 3 years. Back to you, Charles.
Edward, wow. I'm taking a note here. This is a lot, my man. Thank you so much. A lot to go through. The market's right now edging higher a little bit.
He's right. It was a lot to go through. I will put the link to this video in the description, but he's 100% right. And sometimes when things are wrong, they're still right at the same time. Tariffs are going to come in. increase in inflation, but it's okay. We've been through this before, and we'll get through it again as American people. My prediction is going to hold steady in January if jobs stabilize. Another cut by March if unemployment hits about 4.5%. 2026 growth at least to about 2% max, 100%. That's what I'm thinking. As always, smash that like. Tap next video is going to be on the screen. Subscribe, plus hit that bell. The Cash App, FearlessDisease, is always in the description if you want to support the movement. See you on the next one. Stay rich and stay fearless.